Hello, hello. All right. So, this is my first live stream, and this is going to be just me being able to document my journey as an investor, as well as hoping to show and teach other people how they can invest and make real money um, as somebody who's younger who doesn't have an incredible amount of money to start with. So, just a bit about myself in this account. I am getting closer to 19 years old. When I was 18, I started this account. Um, so, you can see the all time chart and the 1 year chart are the same. I started this back uh, August 29th um, and started with about $7,000 at the time. And that was from money I made from mowing lawns and doing yard work and stuff like that. And I I've added about $3,000 this summer, which is why that's closer to 11,000 versus 7,000 where it was. But yeah, we made it all the way up to, we made about $4,000 before any real losses, which was both good and bad. Because I think losing some, especially early on, is good because it's a lesson, and you can't just, not every time are you going to win. So I just wanted to go over my portfolio, and if anybody's here and has questions, then that would be great. So let's get into it. I have a variety of stocks and options that I've been part of, and we can go through and show you things that I've kind of done and things that am currently doing, and then we'll be looking to do in the future. So, just as I guess a recap, today's Saturday, July 26th, and the market is closed. So you'll see a few things with crypto that are moving a tiny little bit. 6 cents in the last hour. But yeah, so I guess the day doesn't quite matter. For the week, we were down $144, or about 0.7%. So pretty much flat. Not worried about that. 1 month, we're up $3,980, or 25%. And I guess would be sort of worried that at such a high rate. But I'm as we'll see, I'm heavily invested in Robinhood and Rocket Lab sort of as well, which have both seen pretty drastic upside recently. 3 months, we're up $7,482, or about 60%. This also is a result of the tariff meltdown that we had, where I went. I was in the red for at least a few days or weeks. So that's just coming from the very bottom again to be those huge gains. So 60% in the last 3 months. Year to date, we're up $7,600 roughly, or about 62%. And the 1 year and the all-time are the same, for now at least. We're up $9,162, or 85%, which is pretty incredible. So, yeah, let me just take a look at something real quick. All right. I guess we could take a look at our buying power first of all. We have a buying power of $1,155. Let's break it down. We have zero cash since we are using margin. We have access to $12,369. We are using $8,804 of that margin. And then we are also using $2,400 of collateral, which is Robinhood's money for selling puts. And we have one credit spread. So that's collateral. And we have a pending order of $10, which is a dividend reinvestment. The portfolio is about $4,800 above our margin maintenance, or 24%. That is a bit higher just since I'm using more margin, and these options as well impact that. That's something I've been trying to increase. But we do have a 24% decrease in those. And if we close out those puts and that credit spread, that'll drastically increase our margin maintenance. The interest we're paying on that $8,800 is $1.27 per day, as well as the $5 a month for Robinhood Gold. And that's at a 5.75% interest rate, which is incredible in my opinion. Even with, a 10% market return, that's still some room. And especially as I'm young, I'm definitely willing to take that risk. So let's take a look at, I guess we'll start with stocks. Or I guess we'll go by position. We can ignore the crypto here. These are all, I have $9 of Bitcoin that was for free from Robinhood. Same with Doge. I really don't care about these. And Solana, I bought $5 when they started staking a few weeks ago. I just wanted to see how that would work. And we are up 17% on that. So yeah, I don't really care about that. I don't care about quite owning the crypto, but as you'll see, I do have some proxies with Bitcoin especially. So we'll start with Robinhood. This position has come a long way from where it started. It looks great from where it is now, but we do have a few roles that we have baked in here. But let's just start. We have 100 shares at an average of 84. And they are up 24% or about $2,100. So I own 100 shares of Robinhood, and as well as that, I own one Leaps contract on Robinhood, and this was purchased April 28th. So if we look at Robinhood's share price on April 8th, let's see if we can load it up here. April 28th, sorry. It was $48. So that was basically an at the money Leaps contract. And that expires on January 15th, 2027. So we have, let's see, 533 days until that expires. We are up 245% on this, or $4,400, which is crazy. I mean, we've more than tripled the price. We bought this for $1,800 and it's up to $6,200. So that's pretty incredible. So yeah, and the delta on this is 90, almost 92. So we own the 100 shares of Robinhood. We also own the Leaps contract, which is mirrors about 92% of that price movement. So you could say we're roughly at about 200 shares of exposure. And against that, if we go back into our Robinhood, you'll see we have a few option strategies open on Robinhood here. So earnings is coming up in 3 days, which is one thing to note. So we have the Leaps contract here, the 100 shares here, and we have 2 covered calls open at a 120 strike. Robinhood has been as high as 113. Earnings is coming up in 3 days, and I think Wednesday after the market closes. I'm not super worried about this hitting $120 for earnings. I think it's going to be a great earnings call. I don't know if the stock price will go up or down because of that, but I think there's going to be great guidance, great revenue, and increasing the guidance for next year, as well as introducing, that we're going to be bringing out banking in the fall and stuff like that, which is going to drive their revenue. So I'm not worried about this hitting 120 by next Friday. If it's going to be anywhere close, I'm just going to roll it. If we just look to roll it, like if we were going to do something right now, if we roll it out 2 more weeks, we could, for a net even trade, we could get up to 130. So I'm really not worried about Hood, especially not hitting 130 in the next 2 weeks. It's gone kind of parabolic since, but I don't think we're even going to be risking that. So these we're already up a bunch on. We had to roll for, we rolled from 105 to 120 and pushed it back 2 weeks, which just shows, how much you really can roll these out with the implied volatility. It's at 96%. So, it's basically estimating Robinhood could double by next year. And also there'll be an IV crush after earnings. So these are going to be just fine. Made a decent amount of money on these covered calls, and my goal is to pay for part of my Leaps contract on Robinhood, but I'm up quite a bit on Robinhood anyway, so not too concerned. But we are selling 2 of those, one on the shares and one on the Leaps contract. We also have a put credit spread open. This is at 95, and we're buying the 90. This was just, I can't afford to sell another put to do a covered strangle. So I do want to bring in income on the put side as well. So we did that credit spread. If we need to, we can roll this down and out as well. We could probably push it back. Let's see if we can. It's kind of hard to roll these on Robinhood, but let's see what we can do. So our puts. So we have to buy back the 95 put and sell the 105. So this would undo our contract. And then if we were to go out 2 weeks, we could probably roll this down to the 90 and 85. That's going to cost 12 cents. So we could push it out 2 more weeks maybe. I'm kind of curious now. So that's going to credit us. So, we push it out 4 weeks and we can move it down to $5. So that's not going to be a problem with me. And I think the stock's going to go up before earnings regardless. So we could close that out before. I think I opened it for $78. Oh, $92. So if we get anywhere near close to maybe that 70% profit before earnings, I think we are just going to close this out for the next win. But yeah, that's our Robinhood position. So we're up quite a bit on this. We're up 2,000 on the shares, 4,000 on the Leaps, and we're down a bit overall with the covered calls because we had to roll them for debit, I think once, but not worried about that, and we're still up huge. So yeah. Next, Rocket Lab. I've been in this since last December, I believe. We were in it November actually. We were in it for this earnings, which was right about here. We own 200 shares at $16. So we're up triple on the shares. The only downside to that is we are pretty deep in the money with these covered calls on Rocket Lab. We had these at like 26, I think, beforehand, and then we rolled it out for like 5 or 6 months. Let's see, we were at 26. We added 5 months to the contract, but we gained $5 of intrinsic value, so $1,000 total between the shares for December. And I'll just keep rolling this out if it makes sense. But I need to wait for more expiration dates to open on these, so that's just sitting, and it's collecting me, I think, $3.50 a day in theta. $5 a day between 2 contracts. So not worried about that whatsoever right now. That's also a huge winner. So, and I'm also waiting for long-term capital gains would be able to kick in. So if I sell those after November, whatever, I think it was 17th, but if I sell them in December, that's going to be just fine. Plus the Rocket Lab position, we're up on covered calls all time, as well as the shares. BITO is an interesting position. We bought 100 shares at $24.29, and we bought those in February, so near the top for the year. This pays a dividend every month, and let me see if I can share the spreadsheet here. If we stop sharing for a second, share. There we go. So if we share our BITO, so we bought 100 shares here January 16th for $24.29. And right away we started selling calls on that. So we sold our first one for $55 at the 26th strike, made $49. Sold another one, made $56. We got our first dividend of $96. And here's the profit for each thing on the side. We've had to roll for debits twice. Actually, not even debits. We've rolled one time for, I think, net zero, closed for 87 and open for 87. And we rolled for debit one time a few weeks ago just to move our strike from the 21.5 to the 23. So if you go up here, we initially paid $24.29. We're down $184 on the shares since we bought them, but we've made $436 on the dividends and $195 on the calls. So collectively, if we sum those, we're up $631 on the income, and we're down $184. So that's over $400 on $2,400. So that's going to be at least a 16% gain on that. So let me go back to the portfolio here. So we're down on the shares, but we're up an incredible amount on the income we've made from it. So not worried about that. Our covered call, we rolled this up so that we could be out of the money. And this has decayed. We're at 23 and VSEO is at 22.60. And this decays this Friday, expires this Friday, 8/1. So we're going to end up rolling this out on probably the next green day, maybe closer to Thursday or Friday. See if we can get it closed for $1 or $2. And then looking ahead, if we roll out 2 weeks, we're looking at $30 here. This will decay away almost entirely this week, so it's going to be almost a $30 credit. Or if we roll it maybe to September 19, we could get up to $60. So we're going to be making plenty. And then dividends come in. We've averaged $70 a month in our 6 dividend payments. So not too worried about that. All right, headed back to the main screen. We've gone over Robinhood, Rocket Lab, and BITO. 2 more that really matter, I guess. TSLL. I opened this initially for an in-the-money covered call trade. We bought these shares at $12.44, and we agreed to sold them. Let's see if I can find the history here. I think this was it. No. June. All right, June here. We bought 200 shares at $13.46, and we sold 2 covered calls in the money, but we were going to make credit, and we've rolled for credits plenty of times now, 3 or 4 times. And now we're actually in a covered strangle with this. So we own 300 shares at $12.44. We have a put at 9 and a put at 10 for $8.15. I wanted to stagger the strikes just a little bit. For the $9 put, we collected $38 on this, which is over 4% in a month, not even 3 weeks. And $10 put, we collected even more. This we rolled, 76. That's 7% in 3 weeks, which is incredible. I don't think TSLL will go very much lower than it is now. So I don't see, especially the 9, as very risky at all. I don't want to take on these shares, but I can keep rolling for credits. And then these covered calls, I don't care if I lose these shares or not. I've kept the strike at 11.5 the entire time. But the other day, Tesla kind of pooped on their earnings, and Tesla dropped 9% the day after earnings, and TSLL dropped 18% because it's double Tesla. I think if we come to the week, you can see that. Here we go. Yeah, this was earnings day, and we just dropped off a cliff. I rolled my puts in the red to collect plenty of credit, and then on the green open, I rolled my covered calls out, and we collected $201 for 3 contracts for 2 weeks, I think. What's the expiration? Yeah, 3 weeks of time, which is incredible on that account. So it's almost a 7% return in 3 weeks again. So never going to complain with that. So I'm really just letting these ride almost till expiration. And if they're not going to get called away from me, then I'm just going to roll it again. And I'm going to roll the puts down if I can. I don't really want to be selling those shares, but we're bringing in a lot of credit on TSLL. If I go to my phone and pull up the, the realized profit and loss, TSLL is sitting at plus $1,004 for this campaign. So minus the 400 or so we're down on the shares, 300 down on the shares, that's $700 of gain. So really not worried about that, and that's on 3,000. So we're talking 20, 30% here. So we're just strangling this. Don't really care what happens in the call side. If I can get a credit for rolling the covered calls, even if they're in the money, I'm going to do that. And the puts also just making money on both sides. Apple and Tesla were just $20 investments up front. Apple's down 50 cents and Tesla's up $8. Those have been there forever. And then Ulti is the new one. Been hearing a lot about this. Been into dividends in the past with these. About 100 shares last week, and we're getting our first dividend payment which is $10.29. We're going to let this drip entirely on its own and see how that goes. We're going to let this sit for at least a few months. But yeah, we started with 100 shares of that. Last thing here is we have a Palantir debit spread. I very rarely buy options besides the Hood Leap. But yeah, we bought this is a 135, 145 put debit spread. We opened this for, let's see, $378 on 6/27. So June 27th. We bought right here. This was the day Palantir got rebalanced out of the Russell 2000. So it sold off 9 or 10%, and nothing changed about the company except it was getting held in less places. So you can see we bought this for very cheap. Got in here for $378, and now it's worth almost $700. So we're up 84%, or $319. Nothing really about this that I think I need to do. If you click simulate here, it's just time decaying away now. Every week, each one of these lines, I mean, you can see it accelerates towards the end. We may not hold till the end, but as long as we're above 145 by September 19th, we make this expires at $1,000. So $300 more to make, but I don't want to be too greedy. But we're sitting at 160 almost on Palantir. So a 10% drawdown would be 145, just about. So yeah, that is the Palantir debit spread. I don't think anything else right now. The all-time there still up $9,100. So one last thing that I have been wanting to do for a while. I wanted to do either a wheel strategy or a covered strangle on TQQQ. This is the triple leveraged NASDAQ. So it's the NASDAQ 100 times 3 both ways. So it's, and compared to QQQ, which is about $550, TQQ is not about 90. And as you can see here, the put and call premiums are just insane. 1 week at like a, let's see, at 20 delta, we're generating 1%, which is just crazy to me. So I think either when we get this TSLL called away from us, which will happen, whenever that's going to expire up above 1150, we're going to get $3,500 back. And depending on how much buying power we have to play with, I'm looking just at doing a wheel strategy on this. So whether it's every week, I mean, that's 1% a week on 8,500. So that would cost us 8,500 of collateral. We're sitting in an 80% chance of profit, and this is on a green day. So if you look at the call as well for like a 20 delta, that's a 30 delta. If we look at a 20 delta here, that's got 2/3%. And triple leveraged ETFs have trouble going up when the underlying is not increasing at a significant rate, because a 1% down decrease on a more expensive stock is more than the 1% increase on a cheaper day. So it has to be going up constantly for it to actually increase the price of this. So there's pretty much a limit, or it's harder for it to go up than it is down right now. But I think what I would kind of do is into a red day where the puts are elevated, because you can see here the puts are down 20-30% here today, but calls are down depending on the time value. But if you go out more, they're actually up or down. Just these aren't very good examples, I guess. but you're going to see they're up more often when it's green and down more when they're red. So puts are going to be better on red days. But even here, 85 strike, it's a 23 delta. We're getting 1% on our money. And if we were to get assigned that, then, I mean, if we're selling at the money calls for 1 week, we're generating $160. I mean, that's almost 2% depending on the stock price for 1 week. And I mean, if it's 2 weeks, it's going to be 3% over 2 weeks. And I mean, the point here would just be cash flow versus stock appreciation. Probably just selling the call at the same price I bought them at with the put. So yeah, that's pretty incredible. And then if we get to that point one day where we have enough to do a few contracts, you know, we're selling, and this is on a 1 week basis. I mean, if we sell both sides here and we have shares, so we're not at risk to the upside, I mean, that's $150 a week just in credit alone, which is pretty incredible. I mean, that's $600 a month. That's $7,000 a year. And that's life changing. I mean, $7,000 a year on how much would you need for that? $15,000, $18,000. So that's how you do it. And I mean, those are pretty high probability trades, but that's why TQQQ is on my list. And we're going to look into that. I've done some put credit spreads in this before, but I really just don't like the swings that this can experience. If I do them, I go out farther. 55 days here would be close to that cycle. And I mean, when I do them, I go out really far. It's like 75 and then maybe 65. How much is that? I mean, that gives us 10%. It kind of just depends. The fear I have here is you basically just lose your max loss. Like if you go into the red, you're going to lose all of it right away. But yeah, so we don't really. I feel like I don't want to go define risk on these. I want to just be able to buy the shares. I mean, even here, 2 months, $600 on just the put. It's crazy, and I mean that's obviously at the money, but it's pretty crazy. Like something down here at the $50. I mean, you know, you see, I'm sure you see what I mean. It's just kind of crazy to see the leverage on this, and it is, you know, it is the NASDAQ. So that's what I hold in my retirement account. That's what I try to follow. Another one is TNA. This is essentially a leveraged Russell 2000, cheaper than TQQQ. So this could be something I could do after TSLL. That money comes back to me. And take a peek here. Even 1 week, and we're going. This is a 16 delta, and we're getting 1% on our money. So if you go something a 25 delta, that's 1.5%, $55 on 3,500 in 1 week. And if you get assigned, sell at the money or whatever your stock price, and you're getting 3% a week. So pretty incredible stuff. And that's, I think, what we'll be looking for in the future. So I think that's going to be it for today. I'm looking to make some more videos on here in the future, and just going to be maybe streaming. Probably not doing live trades, but we could. Depends. And yeah. So thank you for anybody who sees this. If you do have any questions, just leave a comment down below and like and subscribe if you like this kind of stuff. So thank you all for watching, and I'll see you next time.